Hi, this is Richard Campo from Rose Capital Partners. I thought I'd put this video together as if you receive trust income and they're looking to obtain a mortgage off the back of that. So what I'm going to talk through is one, the definition of what falls into this category, secondly, the assessment that banks will apply, and then thirdly, how that determines the sort of loan that you might be offered. So the first part is around the definition, so that's really quite straightforward. If you are receiving income from a trust, this is something you might be looking to do. But within that, there's quite an important distinction. So if it's your sole source of income, banks treat that quite differently as opposed to whether you have another source of income and it's then a secondary form of income. So you might be employed or self-employed and then you get this as an income. Banks are more likely to take that than if it's your sole source of income. Again, not exclusively, and it's not a problem either way around it, but from that very, very starting point, that does really set in motion what path we go down as to what sort of banks we talk about. So really from the outset, it's very, very clear to understand, is it your sole source of income or is it a bolt-on to what you do elsewhere? Now, once you've taken that, then we look at how banks assess that. Now, if it's your sole source of income, obviously then we can use that. It's very straightforward. We'll take the trust income, and I'll talk in a moment about how that then drives the actual loan amount to be offered. If it's a sort of add-on to your main income, banks will do sort of one of three things. They'll either include none of it, half of it, or all of it. So depending on how much of a loan amount you want, depends on what sort of bank that we want to talk to. So again, that's broadly how it would be assessed. In terms of evidence, which should be quite important as well, some banks will want to see simply bank statements, which is probably the simplest way to evidence that. If it's your sole source of income, we might need to write to the trustees. Sometimes it's taxable, sometimes it's not, but if it is taxable income, then there's probably quite easy ways to evidence that through your tax return or accounts or however that's dealt with. Again, sometimes a letter from the trustees might be sufficient as well, might be a cleaner way of doing these things. But again, going back to what I said before, depending on the type of evidence we can get together will drive the type of lender we go to as well. So that assessment point is really, really key, because you don't want to go to one bank and say, well, we need X document when you can only get Y. Let's deal with that all at the outset to make sure things go smoothly. And then lastly then will be sort of how that's assessed. So let's put this into the category of your other main income is dealt with, and then how much can you leverage off this trust income. So what banks will offer is broadly around about 4.5 times your income. So let's use that as a starting point. And for round maths, let's say you receive £100,000 a year in terms of trust income. Now, banks have two ways of looking at this. They'll either just simply take the amount you receive, because often tax is dealt with at source, and then they'll apply a multiple of say 4.5 times. So that will get you to a loan amount about £450,000. Now, what some banks will do is effectively gross that up if we can evidence the taxes paid at source. So that would work out to be about £170,000 if you're PAYE, and then that same 4.5 times multiple applied. So that takes you to a loan of £765,000. So you can see quite big differences there depending on how much you need to borrow and how the bank assesses it. So I mentioned a couple of sort of different routes we can go down to get you there, but the main thing really is to pick up with one of the team. We'll see what we can put together, how we can put it together, so that when we do come to apply to a bank, we go to the right one at the outset and make sure the whole thing goes as smoothly as possible for you.